You just receive a notice from the IRS saying that you owe thousands or maybe tens of thousands of dollars, and you don't even believe you ever filed that tax return. If that's the case, it's very likely that the IRS filed a substitute for return or SFR on your behalf. And if that is the case, it's probably costing you a whole lot of money in taxes. I'm Bob Jablonski. I'm a certified tax resolution specialist, and I help taxpayers nationwide deal with IRS problems. Today, I'm going to break down SFRs for you, why it happens, and what you can do if it does happen to you. When you don't file a required tax return, the IRS often doesn't just forget about it. Remember, they have information reported to them on your income, including W-2s, 1099s, and so on. And they know when they believe you actually owe them money. When that occurs, they're often going to file a substitute for return or an SFR on your behalf. And that's just a return that's getting processed with the income that's been reported to them. And it's typically not going to be to your benefit. It's a substitute for a return you did not file. And so what's going to happen there? Like I said, they're going to have all of your income, all your W-2 income. And this particularly happens when you're self-employed because they have all of your 1099 income. So they've reported all of that, but they have none of your business expenses. In addition, they don't have your itemized deductions if you qualify. If you have dependents, they're not aware of them and you're not going to get any credits. So let's say you were single, but you have two dependents and you qualify as head of household. What's going to end up happening is you're going to end up filing as single, all of your income reported for that business, none of your expenses, no deductions, no dependents, and so on. So what's the result of that? The result of that is going to be a tax bill that is often wildly inflated. So why is the balance so high? I've already pretty much told you why, right? I mean, if you're a business owner and you have income, you have no expenses, you have the worst filing status, you are in a position where you have no credits, no dependents, and so on. Let's just go through a real brief example, high-level example. Let's say you're self-employed and you had $150,000 in income that was reported to the government, but you had $80,000 in expenses. Well, the result's going to be two things. Your income that's going to be taxable prior to your standard deduction is going to be $150,000 in example A. In example B, if you filed your own return, it would be $70,000, 150 minus the 80 in expenses. So now you're either getting taxed not only at a higher dollar amount, the 150 versus 70, that's also going to put you in most cases in a higher tax bracket, so a higher percentage that you're being taxed. Now, remember, you're self-employed. Part two of that is you are getting self-employment tax on your Schedule C on 15.3% on the full 150 versus on the 70,000, the 15.3%. So not only are you getting taxed for your income tax too high, but your self-employment tax as well. So as you can see, that quickly adds up. We didn't even talk about itemized deductions, dependents, filing status, any of those things. Just looking at that business, that income for a self-employed person. In addition, remember, there's late filing penalties, there's late payment penalties, and interest. All of those are going to be tacked on at a higher dollar amount of tax that's owed. So it's no surprise that you're suddenly going to owe $50, $80, $100,000 when your tax bill should have been much smaller. So here's the good news. The SFR isn't the final word. You can file a correct return with the IRS and override it. So what's that going to do? It's going to override the substitute for return. It's going to get you the correct amount of tax that you owe. And then that's going to reduce your balance in most cases, at least in the cases we're talking about, right? So the problem is if you wait too long, you could have already been harmed. And for example, you could be levied or a lien could be filed and you're going to sell property and they're wanting more than you actually owe. So timing here is important, right? So what happens in the SFR process? Well, first of all, the IRS is not going to just suddenly process this return. They're going to send you notification that they believe you owe this tax. They're going to file this return. if you don't respond. Um, Eventually, they'll file what's called a notice of deficiency. They'll send you a notice of deficiency. It gives you 90 days to petition the tax court, or guess what? The tax is assessed and you owe it. It then goes into collection. It goes through the collection process, the normal collection process. They notify you you owe the taxes, and then you have a series of escalating notices. This is when people panic. Hopefully, they panic before the liens and the levies hit. But if you wait long enough, those liens are going to hit at the wrong amounts, and those levies can be enforced. You may end up with payroll garnishments or bank levies at an incorrect amount. So, what should you do? So, if you get notified that the IRS is looking at filing a substitute for return, they believe you haven't filed a tax return and you owe this amount in taxes, you need to address it before it becomes a problem. If it goes through the entire process and you're now in collections, it's time to file a corrected tax return. And so, to go about that, you would want to first of all pull your transcripts. You want to look in your account transcripts and figure out which years did the IRS file a substitute for return for me. Then you want to pull your wage and income transcripts and go through the preparation process. Then you're going to file the return accurately. After it's filed accurately, now you can begin to negotiate the tax that you owe and find a resolution to the issue. You want to wait until you get it filed properly, right? So that you're actually negotiating on the correct amount. A lot of the large balances I run into with taxpayers, particularly self employed taxpayers, is due to substitute for returns. If you believe that the IRS may have filed a substitute for a return on your behalf, um, contact us for a free strategy session. I will leave the link, the booking link, in the description below. And if you do that, we can pull your transcripts and see where you're at and help you get that fixed. Remember, SFR cases, substitute for return cases, are fixable, but timing, as with many IRS cases, is critical. So get started on that and get it fixed and get your life back on track.